Now let's look at the third one, that is the high risk asset class. These are the 8 characteristics when you look at a high risk asset class. Here, you can expect more than 5% returns over the repo rate. In medium risk, you are up to 5%. High risk, you are expecting at least more than 5% returns than the repo rate. So 12 to 15% is a good return. Generally, I know you will say, okay, Rohit, we get returns on a portfolio which are 20, 25, 30, 40, 50% for that matter. That is sometimes when the market is going up and you are in that journey, you would make that kind of money. But if you take an average of our entire stock market, we are between 12 and 14%. So we are not going too high or too low. It is natural that when the cycle is going up and you're a part of that cycle, you will make more returns. When the cycle is going down, you will have negative returns. So, but if you average it out, it is 12 to 14%. And that is why I'm saying ki with a high risk asset class basket, expecting 5% more returns than the repo rate is ideal. Next point, the returns are subjected to high risk affected by economic factors and global risk. Yes, when you're doing high risk, high return asset class, the returns are bound to change and fluctuate. So that's there. The returns are taxable. So simply in this asset class, the returns, whatever you want to make, they are taxable returns. Next, zero capital protection. Because you're putting the money in high risk, high return SM class, the capital protection here is zero. So your money can fluctuate 100% up, can fluctuate 100% down. Monitoring is required on a frequent basis. High risk, high return means you are taking the risk day in and day out. So monitoring this is more crucial. So it is not once you are monitoring, you have to monitor more often. A monthly monitoring system might be something that you would need for your high risk, high return portfolio. High chances of anxiety and stress due to investment failures. We are looking at investment which are fluctuating with time, which might give us very good returns, whistling monitoring. It might dip down whistling monitoring. While you're doing that, it is very natural to feel anxiety and your BP will keep on shooting up and down because of playing around with money, and the risk here is super high. So it is mentioned that high chances of anxiety is here, right? The asset class can be preferred for medium term and short term goals. Generally, what I say is where the volatility is too high, you are generally going in with a lot of money there. If you're going with 2,000 rupees and your money is doubling and you're making 4,000 out of it, it is not going to change your life at all. But if you've put in like 5 lakh rupees and that is going to become 10 lakhs in a shorter duration of 4 years or 5 years, it'll make sense. So generally it helps you change your lifestyle. And that is what you should look at when you're investing in a high risk, high return product. And it is not to have small amounts cash in, cash out day out, because that is not going to make you wealthy. It's going to make you rich for that particular day or that month for that matter, but the money will come down again. So it doesn't make sense at all. So invest in such asset classes for your short or medium term goals where that money is going to really impact and change your lifestyle. Okay. The last point here is asset class has got potential to generate high returns, which can help change in lifestyle. I just mentioned this point, and that's what a high risk, high return asset class should do for you in a portfolio.